Hi, welcome to Financial Education for the Nation. My name's Warren Shute, and today we're going to be talking about the financial benefits of getting married.
This episode of The Money Planner is brought to you by Idealo, the price comparison site, helping you shop smarter.
Okay, so everyone says how expensive getting married is, and I completely agree. It is a very, very expensive time, an event where the meals tend to double in value, the wine seems to be more expensive, the venue seems more expensive. So is there any financial benefit of getting married? Well, there is, and it's called the marriage allowance. Okay, now the marriage allowance is a benefit which you can claim if a criteria is met, and the criteria is there is a non-taxpayer and a basic rate taxpayer in the relationship. Now, if you're both basic rate or one's a higher rate or whatever, it doesn't count. You might as well switch off unless you know someone who this will apply to, then forward it on to them and they might be able to help out. It only applies if one's a non-taxpayer and one of the parties is a basic rate taxpayer. And then you can claim this additional allowance. Now, this additional allowance allows the non-taxpayer to transfer some of their basic personal allowance across to the basic rate taxpayer. So you're kind of sharing it. Now, unfortunately, I can't share all of it, which is a real shame. I think you should be able to take all of it. I don't understand why you can't. Not wanting to give too much tax away, I guess. Maybe that should be a pledge for the manifestos that are coming out at the moment. But what basically happens is when we earn money, we get the first £12,500 tax-free when it's earnings, okay? And then the next £37,500 is taxed at 20%. And then, so that comes up to 50, 12.5 plus 37.5. And then over £50,000, you pay 40% up to 150, and then you pay 45%. Now, if you're up at that level, great, good on you, good for you. You're obviously paying a lot of tax as well, so you probably want even more complex tax planning. What this really reverts to is someone who's not earning, paying any tax, so basically they're earning £12,500 a year or less, so maybe a stay-at-home person or someone who works part-time, and then someone who's earning up to £50,000 because they're only paying the 20%, the basic rate tax band. In the marriage allowance is one of those things that so few people claim, and it baffles me. I guess it's not really spoken about an awful lot, and it's something you can claim and save yourself a little bit of money. So it's available to married couples and those in civil partnerships. Okay, and it's basically where you make an election to transfer 10% of your personal allowance, which is £12,500, so 10% of that will be £1,250, from the non-taxpayer to the basic rate taxpayer. Okay, so the non-taxpayer is not paying any tax, so they don't really need it. So they can transfer 10% of their £12,500 from them across to the basic rate taxpayer. Now, there is a little bit of a catch. Obviously, if by transferring 10% of the personal allowance could make that taxpayer or that individual a taxpayer by doing so. So you just got to be a bit careful. You're not really disadvantaged because the person transferring will pay tax, but the person receiving won't pay tax. So they'll net each other out. But if you manage your affairs individually, and you've got to respect that, some couples manage their finances individually. That's something I normally touch on around Valentine's Day. Just try and keep things thematic. Then there's a compensation payment needed to be made up there, I guess. But if you're a non-taxpayer and you don't have any earnings at all, you can transfer 10% of your £12,500 or £1,250 from yourself to your married or civil partner, and they can then add it to their existing £12,500 personal allowance, so they get an enhanced allowance for doing that. Now, great thing is, they will then pay less tax, and they're a basic rate, 20% taxpayer. I say 25% taxpayer. It's been a long time since it was 25%. They're a 20% taxpayer, so therefore they'll save about £250 of tax a year for just doing that, for just filling out a form, just making an election. So it's fairly straightforward. It's an easy thing to do. Now, The great thing is, this has been around now for about 5 years, and you can go back and claim for previous years. Okay, so you can go back and claim for previous. So if you've never done it, you can go back since inception, and this is going to be the last tax year you can do it. You can go back to it since inception. I'm just having a look at my notes. Since 2015-16 when it came in. So 2015-16 came in. Now, remember, you're transferring 10% of the personal allowance in the tax year that you claim for, and since 2015-16 the personal allowance has increased, so not every year will be £250 that you can claim, but hey, if you haven't claimed so far, you can claim it and you can allocate it into the current year. And what simply happens is the non-taxpayer in each of those years will gift up 10% of their personal allowance to the basic rate partner. So it's not nice and easy, really. It's nice and easy. It's 4 years you can claim back, 4 years. And I calculated in total, if you claim the maximum, that's about £1,149 worth of income tax that you can claim, which isn't to be sniffed now. That's pretty decent, I think. So definitely worth doing. And at this time of year, probably very, very appreciated. With all the additional expense we associate with Christmas and New Year, what's going on. Hey, but isn't it always expensive? Hey, it's always expensive. So how to claim? So you understand what it is. Personal allowance, £12,500. You can claim 10% of it and transfer it across the base rate taxpayer, and we can do that for the last 4 years. I think I just said 5, but by the looks of it, it's 4 years. 2015, 16. So what's that? 15, 16, 16, 17, 17, 18, 18, 19, 19, 20. Oh, it is 5 years. It is 5 years. So you can go back those years. How to claim for the refund. So you basically go online, you go onto the Gov website, so www.gov.uk/apply-marriage-allowance. There's a link in the show notes. So if you go to the blog that accompanies this video, go on to warrenshute.com, then our blog, and there'll be show notes in there. You need your national insurance number when you do it to prove your identity, and then something else like a payslip, passport, something like that, or child benefit, and then you can just go through the application process. You'll also need the national insurance number of your husband or wife and the or civil partner, how it works. If you don't like websites, you can make a call. Just pick up the phone and ring them. You can call HMRC on 0300 200 3300, or you can even write to them, make a claim. Okay, so just write to your local tax office so you can do that. The refund for the prior years is usually received in the form of a cheque. So you receive a cheque post, which is very welcome, I'm sure. But then going forward, they'll adjust your notice of coding. So they'll adjust your personal allowance. You get a higher personal allowance. So that's it. I don't want to drag it out any longer. That's pretty much what it is. It's very straightforward. It's called the marriage allowance, and it's when you can transfer 10% of a non-tax paying individual across to a basic rate tax paying individual. Okay, and then when they receive it, they just pay 20% tax less on that money, effectively, and we can go back to the 2015-16 tax year to do a group claim if you've not claimed in previous years. That's it. Thank you for watching. Thanks for listening. If you have any questions for me, please ring in, email in, or message me on social media, and I'll be more than happy to cover them. That's it. Enjoy your weekend.